Welcome, everybody. It's December 29th, 2024. Welcome to all the Rain King Insights members and to those of you that are not members but catching this on my YouTube channel. This is a very special video for the 2025 market outlook and some ideas for 2025. Let's dive into it. And before we do it, let's remember that Rain King LLC is the author of the video and it's for educational purposes only. As in all investing, there's risk of substantial losses, so please consult a certified financial advisor before making any investment decisions. And remember that Rain King LLC is not a registered investment advisor. Okay, we've got lots to cover. We're going to go over the big picture, then we're going to do a 2024 review, going to touch upon some teaching moments. Then I'm going to discuss what could be a scenario for 2025. And then I have 16 picks for 2025. Okay, the bull super cycle. I've talked about this numerous times in mid-October at the National IBD meetup. I spent 20 minutes on the bull super cycle. You can get that video off of ibdinvestors.com. But a short synopsis is this. 2009 was the market bottom, an important market bottom, and the bull super cycle could take us out for 26 years, out to 2035. One of the key drivers of this super cycle is the millennials. There's 84 millennials that entered peak consumption years starting in 2019. Some of the older millennials turned 40 in 2021. And then we have this new catalyst. We have artificial intelligence being built out as we speak. And that is probably going to be a trend for the next 5 to 10 years. And in addition to that, the Fed has just started a rate cutting cycle, albeit it may be slower. So the bull super cycle, this is looking at the new bull market that started in October of 2022. We've had 2 good years, up legs in the market. And this super cycle could take us out to 2035. And I talked about some rough projections for the S&P 500 based on history and some demographics within the millennial grouping. And basically, we said that we could get up to 10,912 in the S&P, or perhaps get as stretched as a 200% move from where we are today up to 13,000. Again, it was driven by the millennials with their consumption years, buying houses, cars, insurance, having families, etc. So we're going to talk a little bit more about what is coming forward in 2025. Now, to get from the bull market today out to 2035 is not going to be easy. There will be probably 1 to 2, maybe more bear markets along the way, but we can have bear markets in a super cycle. Now, this is the S&P 500 weekly chart for the last 5 years. You can see the green being up years. Even the COVID year, believe it or not, was an up year, even though we had that massive crash back in March of 2020. Then we had the bear market in 2022, kind of a mild bear market at 20% decline. And then we've been trending higher the last 2 years, and we'll finish positive on the S&P. So what is going to happen in 2025? Well, nobody really knows. But one thing that was noteworthy to me was Wall Street veteran David Rosenberg offers an apology for his stock market pessimism. Now, this came out on December 6th, right as the market was starting to peak here in December. And he said, but to put it in context, David Rosenberg has been a major bear for the last few years. So he's basically been wrong. So on December 6th, he said, it's high time for me to stop pontificating on all the reasons why the US stock market is crazily overvalued and all the reasons to be bearish, based on all the variables I have relied upon in the past, from valuation to sentiment to overcrowded positioning. So what I'm going to do is assessing what it is the market is saying, because the market can certainly move to excesses in both directions and make faulty assumptions. But the market is not stupid, he said in a piece that he titled Lament of a Bear. Little concerning when probably one of the last bears on Wall Street finally throws in the towel and says, I give up, I'm going to be a bull. That's usually probably a good marker of at least a short-term top. And we've had some volatility the last 2 weeks of December. So That's a cautionary sign in my book. All right, let's go back and look at 2024 in review. So here's a line chart of the S&P 500 and mark a couple of the noteworthy things. We started off the year, sticky inflation kind of flared back up, and the Fed, rather than cutting rates right away, they paused and says, we're going to have to wait a little longer before we start cutting. And the market was still rising. Cybersecurity was one of the first groups to peak out in early February. Then we had the market trying to move higher. We had an expectation breaker, and the market's breadth in March and April was very, very poor, and there were distribution days piling up, telling us to get more defensive. And the market did pull back kind of a healthy 6%. We noticed at that time that some of the infrastructure stocks around AI for power and cooling were really starting to gear up. Now, out in June, that's when the semiconductor industry, which was very strong the past year, really started to top out. NVIDIA peaked in June 20th, and NVIDIA tried to make a rally in the second week of July, and it failed in that rally, and the whole semiconductor sector started to roll over, eventually correcting 29%. Now, the second half of the year was interesting. It started really with the yen carry trade. We had that massive sell-off, kind of a shocker. We had an over 9% correction again, but the market recovered fairly quickly from this. You can see the rest of August was really recovery, and we went into September a little bit cautious. But September 19th, the Fed started its rate cutting cycle, and we noticed that cybersecurity, the group that peaked way back in February, was starting to show some more leadership, and the software grouping was also showing new leadership at new highs. Now, in October, a lot of bad news was shrugged off by the market. Iran attacked Israel. We had port strike worries. We had a higher CPI print, and there were a number of concerns about semi-export worries, and ASML had a poor outlook for the semiconductor industry. But yet, the market held up in here, showing us tremendous strength. The market started to come in a couple of weeks before the election. And then when the election went through and Trump won the election, we had a very sharp rally off that. And we recovered any decline we had in mid-October. And we went to new highs. And new highs were really, really working well late November, early December, until the Fed came out, and I believe it was the 18th or 19th of December. And they said, we're going to cut rates today, but we're definitely going to slow down into 2025, which the market really had a bad reaction to. So here we are, we're at new highs for the year, but there's a lot of things that aren't quite right. We've noticed that breadth is not great. We've mentioned sentiment had gotten pretty overheated in my general market updates, with a lot of call buying, excessive call buying, and nobody really being fearful. So as I always do each year, I go back along the general market updates that I do, and I try to call out teaching moments. So if you missed one of these GMUs, you can go back and you can look into these videos and find some really interesting topics and probably get a good education. March 15th was a good one. We talked about, what does a persistent trend look like? March 1st, we talked about all the multi-catalysts that were leading the next bull leg higher. And it was in early April 5th GMU update. We talked about young guns, and these are IPOs, young companies which become new merchandise to lead a bull market. Now, when we got out to May 23rd's GMU was all about what I call jockeying for position. And this was all about how important it is to be on the right horse, to have the right stocks in your portfolio, and if you want to really, really win the horse race. So that's one worth watching again. I spoke at the BAM meetup group on June 11th. I talked about what it takes to be a winner. Now, along the way during the year, I also dropped some GMU extras. August 19th, I did a short video for 10-15 minutes about why we sell on the technicals. You should check that out on the homepage of Rain King Insights. Now, as the correction unfolded, August 23rd, we were looking at a 10% correction on the NASDAQ, and we really outlined in that video what was important to watch for in a correction of 10% in the NASDAQ, what our expectations could be. So we outlined it all in this video. Then We had a couple of other really good teaching moments. We had a GMU on Bill O'Neill's 8-week hold rule, which is a very misunderstood rule. So I really set it straight to tell you what the 8-week hold rule is really all about and what it really isn't about. So that's one worth watching. Also, woulda, shoulda, coulda came out on October 5th. Another interesting video, which was a GMU extra. We had our Blue Sky event on November 9th, some more GMU extras. And we talked about on November 15th, I put out in the GMU really an educational session about if you have big winners, what do you do when they get really, really extended? We explain all the considerations you need to make to do and think about when you're holding a big winner. I did a podcast in early November, and then really importantly and timely was the December 13th GMU. I talked about the selling decision and all the things to consider of why you should consider selling a portion of your positions or scaling some of those positions down on December 13th. So the market soon after had a swoon over the Fed meeting. So lots of information here for you to go back. Now, those of you that are not Rain King Insights members getting the GMU since July, you might want to consider getting a basic membership so you can be really on top of the market throughout the entire year. Now, I've also captured the year with a couple of posts. Now, we're not going to go over this in every post, but I put these on my Twitter feed. You should check it out. There's usually some decent stuff I put out relative to, early February is when SMCI went through a climax top. I flagged it and called it a climax top. Many didn't agree with me. SMCI actually went up a little bit further than this, and then it actually had collapsed. So it was a very timely post. We also talked about some other things that were really under the surface. We talked about breadth. When breadth was finally turning in the right direction, we wanted to start getting some pilot positions. So I put out a clue to that. And also some other things that I think were noteworthy along the way. So you can read some of these posts, just stop your video player. I try to flag some things that could give you some confidence that you might be on the right side of the market. This was the first half of 2024. And here's the second half of 2024. This is the August swoon. And, we talked about the thrust that we got off a follow-through day in here. And we talked about, and I plotted for everybody, the stocks that were starting to break out in real time. These were the stocks that were leading the follow-through day that you really needed to start considering taking a position. So it's a very timely post right there. We also had some interesting posts along the way here, which was actually when the market was really, really holding up amidst a lot of bad news. This we talked about it. The breadth was flat. Semis were getting hammered in here, but yet the market was holding up before the election. So the most recent one was this post on December 6th, which was every day this week, the advanced decline numbers and the up-down volume were really weak under the surface. I was getting very concerned, even though we were at new highs. I was flagging that under the hood did not look good. And we mentioned that things, got weaker as we went further into December, though I will say some of the absolute leaders of the market have continued to show why they're leaders and they're still performing well. All right, let me share my thoughts on 2025 and give you kind of what I see and what a scenario might be. All right, coming back to the bull super cycle. Again, 2023 and 2024 were up years, over 20% both years. And the Fed has just started a rate cutting cycle, albeit it probably will be a slow one, which actually a slow rate cutting cycle in a decent economy actually can be a really, really good sign. People took the Fed slowing the rate cuts negatively, but maybe it won't be such a negative. Now, the themes are there: robotics, artificial intelligence, cryptocurrency, digital payments, lots of powerful themes that could play out in 2025. Now, given what's been happening the past month, there's a couple things that I wanted to highlight which give me some pause going into the new year. A lot of people are very, very bullish. I was very bullish in mid-October with the anticipation that the semiconductor stocks were going to catch up to software and cybersecurity and begin to lead the market again. Well, that's not happened. We'll talk in a minute about semiconductors and how they're actually on the verge of completely rolling over, which I think would be very bad for the bull market. So mutual funds at the beginning of the year, they immediately are repositioning. It's a brand new year with a clean slate. All the managers start at 0% gains for the year. And so they're all positioning for the year. So that usually makes the first 2 to 3 weeks of the year kind of volatile. And that's when you really want to follow group rotations to see what groups are these mutual funds putting their money into, that they're placing their bets for 2025. Now, another negative is tax selling. A lot of people have big gains in 2024 and they did not want to sell in December. They're just waiting for the first week of January to start selling so they can put off taxes for at least another year. So that's a negative. Could create some pressure on the market in the first week. Sentiment excess. When everybody is on one side of the boat, in this case, everybody being very, very bullish. We talked about we hadn't seen such low put call ratios since 2021. There's a lot of excess sentiment out there with people being bullish only. That gives me some pause. Now, on the positive side, there's still over $6 trillion in money market funds that can be fuel if it moves into the market, into equities. But we'll have to see how it plays out. But these things give me some pause in the first quarter of this year, which might not be so good. Now, we have a new first-term administration. The good news about that is generally the stock market does well in the first year of a first-term administration. So that's a plus for the market. The second thing, which is a plus for the market, is we've had no recession. Been worries about recessions for 2 years. So we keep watching that. But at the moment, there is no recession. So that's a plus for the market. Now, with the new Trump administration, there's a lot of talk about deregulation across a number of different sectors, and that's seen as a positive that can unleash earnings and company growth. So deregulation looks to be a positive for the market. And the fourth bullet I have here is disruption question mark. And this relates to the Trump administration's agenda. I know people talk about tariffs, and we already kind of have the playbook for tariffs from Trump from his first time as president. So people kind of have a sense of the tariff scenario, but I'm not sure they really have a handle on the DOGE aspirations, the Department of Government Efficiency. This could lead to some very violent market reactions and repositioning by professional money managers, depending on how far they get with their aspirations. You know, they're talking about cutting trillions of dollars, wiping out departments of the federal government, et cetera, and creating new departments. This could create a lot of uncertainty. We may see some things that we have never, ever seen in our lifetime that could create a lot of volatility. So I think that's something to be cautious about. And the Fed has basically said it's on pause for a little bit here. That's kind of neutral in my mind, but some positives and some negatives, I think, with the new administration. Now, the themes I think are strong. The strong demographic theme of the millennials entering their peak consumption years, top jobs and talent. I think that's all really positive. Artificial intelligence will continue to drive the markets as it permeates over the next 5 to 10 years, similar to how the internet happened. Fintech, I think, will be important in 2025. And that's really about the application of AI. Lenders are starting to use AI more actively. Software data aggregators are sorting data, coming to practical applications in their companies of how to use this. We already know that infrastructure happened a lot, has started to happen in 2024, and is going to continue over the next couple of years, whether it be power. The grids need to be upgraded for electricity. There's also talk of nuclear power to help power the data centers. And there's going to be a lot of high-speed connectors to make the AI highway really, really work. So I think it's definitely a long-term trend. This year, I do think some of the companies that actually apply AI might be some of the winners, though I think infrastructure will also be another play this year. Now, cryptocurrency, it appears that the Trump administration is embracing cryptocurrency and wants to be a leader. So I think that also has potential. Generally, the first year of a new president, cryptocurrency for some reason does well. And I think the sleeper this year as a theme is, I think cannabis, which has been kind of the dog's dinner, might do well in this Trump first term. I think that they're so beaten down that if there's any indication that maybe the reins are going to be loosened on the cannabis industry, the way they classify some of the materials, and also the ability for US lenders to help finance the cannabis industry, could really maybe have this industry outperform, but it's really a sleeper trend that I might see in 2025. So here is just a map of how I think it might play out. And again, this is just my opinion. And in the end, my opinion doesn't mean much of anything, but I'm sharing my thoughts. Now, remember, this little chart that I'm showing you, this diagram of the year, looks into the future. And a lot can happen between now and then. As I mentioned, I think in the first quarter, it's going to be a down bias quarter. I think that there's going to be some uncertainty. I think the market needs to work off its sentiment excesses that built up in December. And I think tax selling is also going to weigh on the market. I think we'll have a healthy, maybe a 5 to 7% pullback over the first 2 or 3 months of the year. Not severe, but enough to change the sentiment of the market. I do think in the second quarter into the summer, we'll get probably the most tradable rally of 2025, maybe from somewhere around March or April, probably till, July-ish. We might get a nice trend in here. The market might give us an opportunity to capture some gains. I think in the fall, we might get an 8 to 10% correction. I think this year is going to be challenging. I think we might correct in the fall, and I think maybe we grind our way back up a little bit towards the end of the year in November, December, which are seasonally strong, ending the year somewhere around 6,700, which I think is about, again, a 10 to 12% gain for the S&P. Remember, the last 2 years, the market's been up over 20%. I think this year is going to be a lot more challenging. I think it's going to be more of a grind. But that's just my view of where we are, looking at the charts, looking at where we are, looking at the sentiment. So I think there's going to be some tradable rallies in here, but I don't think it's going to be an easy year. And I'm less bullish than I was in the middle of October. And one of the things I'm really watching is the semiconductors. Okay, let's get into some specific ideas that I have for 2025. So I'm going to share with you 16 ideas. And the way I go about this is the time frame I'm looking at for these ideas is 1 year, and I'm not allowed to change the picks. They're locked in for a year, which makes it very difficult. To pick something today and say it's going to be higher in 1 year is really hard. So it's a combination of looking at the fundamentals, the technicals, and the themes that I've mentioned. So the groupings are, I've got these stocks into 3 groupings. One I call the liquid glamours. And those are large cap stocks that have big growth ahead of them. I've got 4 names to share there. Then the second grouping are the young guns. These are recent IPOs in the last few years. Generally, they're small and mid cap stocks. I've got 7 names there. And then I have something called mad money. These are speculative stocks. These are turnarounds. This is a place to try some mad money. I have 5 names in that category. Now, I want to emphasize, these are not stock recommendations. I also want to emphasize, this is not my personal portfolio. This is fictitious. Also, I want to remember and remind you, please consult a professional investment advisor before making any investment decisions. All right, let's launch into some interesting names. The liquid glamours, large caps that have 30% plus growth. All right, the first name on my list this year is Broadcom, AVGO. Now, this is a very large company. It just surpassed the $1 trillion valuation as a company. They really focus on a lot of different areas, but the area that seems to be driving growth going forward from the last earnings report are application-specific integrated chips, AISC chips. They are chips that are customized for specific AI workloads and parameters. That market, AISC chips, is going to double. It's forecast to double in 2025 to become a $22 billion market. Now, to put that in perspective, 22 billion sounds like a lot, but when you look at it relative to NVIDIA, NVIDIA's quarterly revenue is more than 22 billion. So this is still a small market, but it's going to see a lot of growth forecast in 2025, and Broadcom is very well positioned. You can see they're forecasting 30% growth and another 20% growth, and that is a lot of growth for a very large company. You can see the return on equity is excellent at 52%. Had a large gap up on earnings just a couple of weeks ago. And essentially, this is the earnings line, and you can see it's starting to see a real acceleration of the growth in Broadcom. So that is my first pick. Now, I wanted to come back to this, what I mentioned about the semiconductors, that I really have them on close watch because Broadcom is part of this group. Now, if you look at the semiconductors, here's a line chart, a daily chart. You can see that, where we are right now, if I drew a red line going all the way back, basically all the way back to May, the semiconductors have gone nowhere. They topped out in late June and July, and they've been treading water, and they've actually formed really a head and shoulders pattern. Right shoulder, double head, and we've got three little shoulders here, or four if you want to count them. This is on a careful watch. If this pattern were to complete, and that would be a breakdown of the ultimate low over here, that could be very, very damaging to the market, in my opinion. And there's such a weighting of these stocks throughout the sectors. They're very, very important, and want to make sure that we keep an eye on it. I don't want to see a breakdown. I want to see this turn and resolve its way back higher, but there's been no progress. I put the big king on the bottom. This is NVIDIA's chart, which again, a simple line will show you that NVIDIA hasn't really gone anywhere since it topped in the middle of June. So we have a close watch on that relative to the pick of Broadcom. The next pick is GE Vernova, GEV. Now, this is a company that came off GE proper, split into three companies, and this is the one that was kind of the energy division. They provide sustainable power and energy solutions. Primarily, GEV is involved with gas power and grid solutions. They make high efficiency gas turbines, and that's important because as the energy industry transitions from coal to renewables over time, this gas turbines are going to be kind of the bridge between the two. And they have their own grid operating software to help with efficiency of operators of the grid. Now, they also have a renewable group, the wind group. They do wind turbines, particularly offshore wind. And they also have a small group that does small nuclear reactors, which plays well into this theme in AI of using small nuclear reactors to power these hyperscale data centers. Now, a couple of facts are data centers are forecast to double the electricity consumption, by 2030. And then when you add on all of the electrification going on in the transportation industry with autonomous vehicles, there's just super, super big demand. Now, GE doesn't play alone. GE Vernova competes with Siemens and Mitsubishi, some big, big players. But this seems to be a well-positioned company. They had their initial spinoff here. They had a little basing period, and the stock had a nice uptrend, and it actually has gone sideways the last few weeks. Now, on the fundamental side, you can see here, this company is a $100 billion valuation, and we have triple-digit earnings forecast, 262 for the past year, and then another 165 forecast for 2025. That is incredible. Now, it's a big liquid stock, lots of shares on the float. It trades a lot of dollar volume every single day, which means mutual funds can take larger positions and not have to worry about liquidity issues. And there are already over 1,800 funds in GEV. On the earnings and sales block down here, you can see sequential acceleration in earnings and sales. By sequential, you can see 8 billion here, 8.7 to 9.2. Each quarter is accelerating, not year over year. So that's really impressive, particularly for a company of this size. So that's an important marker for GE Vernova. Now, I wanted to share this historical precedent. I put this idea of a precedent to First Solar in 2007. I put this out in late September, early October. So I'm just updating the idea here. But you can see here, in 2007, First Solar was a IPO, went up for a few weeks, consolidated, and then it made its first big move, which was a 117% move in 13 weeks. Then it eventually came back into the 10-week line and got support. We've had similar price action, GEV base for about 13 weeks, and then we had about a 96% move in 13 weeks. And then we've gone sideways to form this base. We came right into the 10-week line and tested it, and we got big volume support. Very good sign that this stock probably wants to move higher. Coming out of that, First Solar had another 82% move before it went into a much deeper correction. So let's assume that First Solar being an IPO is a little bit more exaggerated moves than a big liquid stock like GE Vernova. So I've just kind of taken a shot and said, what if we get a 60% move as the next big leg in GE Vernova? That would put the stock around $571 a share as kind of a target I would have in the back of my mind that this company might have a nice move in 2025. Now, I will disclose, I have had a position in GE Vernova since early October. All right, my next liquid glamour stock idea is DoorDash. You're probably familiar with DoorDash. They're in the restaurant, they're in the delivery market, and they really dominate. They've got 2/3 of the restaurant delivery market right now, and they really are kind of starting to hit a sweet spot. You can see here there's a huge earnings forecast for 2025. The stock, came out in 2021, went through a long process here, but you can see the last base was a nice textbook cup with handle. Then we came out of it with 9 weeks up in a row, really classic sign of institutional accumulation. Now we've come into the 10-week for our first 10-week pullback. We touched the line, and we'll see if it gets support there. You can see the earnings line has started to really, really ramp up. And really what's happening, I think, for DoorDash is they're starting to get leverage in the business model. If they can continue to grow their top line by 20 to 25%, which they've done for the last 8 quarters, you can see the profit really dropping to the bottom line with triple-digit earnings coming through. So the model is really, really kind of getting into overdrive, and I think DoorDash can have a strong 2025. All right, my next liquid glamour is Sea Limited. You may be familiar of this name because in 2020 and in 2021, this was a big, big leading stock. So it went through a very, very brutal correction in all of 2022, and you can see the volatility was really elevated throughout 2022 and 2023. So this has got a lot of history behind it. Now, I've just drawn a line here to kind of show you that you can see to the left of the line, you can see wide and loose, erratic price action, wild spreads all over the place, really the market not able to really price this stock efficiently, lots of differing opinions. Well, since December of 2023, look at the change in character. The price spreads are much tighter and much more controlled. And if you squint your eye, you're going to see a lot of weekly peak closes right up at the peak. That's just a total change of character, which is a stock showing accumulation. You can see the more than 1 or 2 or 3 of these big blue spikes. So the stock has changed character. You'll notice that strong earnings or sales are driving the stock, and there's big estimates ahead. So all of that, I think, bodes well for Sea Limited, which is basically, I think it's a Singapore company that has an internet platform. They do digital entertainment, e-commerce, very large footprint. Now, funds have also taken notice, and they are up 3 quarters in a row from 207 to 1216 to 1322 to 1394. So it's on the radar of some of the top funds. Now, you'll notice that way back in 2021, when it topped out, this company had no earnings at the time in 2021, and it was $350 a share. You can see here that the earnings line is turning up. We're getting very close to having record earnings for the company. And if the company was worth $350 a share with no earnings, I think this stock could really, really perform. I think it has the potential to be a big winner in 2025. Okay, here is IBIT. This is the Bitcoin play within, I call it the liquid Glamours only because this is a very liquid instrument that trades over 54 million shares a day. I've got this insert chart. Cryptocurrency tends to perform well right after election day. Here's 2012 election, really good year in cryptocurrency. 2016, great year of cryptocurrency. 2020, another good year. So here we are. So seasonally, this could be a good year for Bitcoin. I think when we ran into 100,000 for Bitcoin, things have paused here, but I think that the pullback will contain itself and probably Bitcoin goes higher in 2025. And this is a way to play that without buying individual coins. I'm buying the ETF. I have a position in IBIT, which I will just disclose to everybody. I think this recent pullback so far is controlled, and I think it has potential. If the Trump administration continues to support crypto, we could see Bitcoin and all of the ETFs and specific coins move higher. So IBIT is a way to play the crypto side. Okay, we're going to move on to our next category. This is called Young Guns. And as a reminder, this grouping of stocks is some of the recent IPOs that have happened in the last 2, 3, 4 years. And they generally are small or small to mid-cap size companies that tend to be dynamic and they're growing. So our first young gun is Astera Labs. This company came public this spring, and this is a really interesting company. They make high-speed connectivity solutions for AI and cloud environments. It's led by 3 or 4 former Texas Instrument leaders. They make memory controllers, retimers, but probably the most interesting product that has recently been released is their Scorpio Smart Fabric switches, which is projected to be a $5 billion market. Now, these are high-performance connectivity switches specific for an AI workload. And they also have an entire wrapper called Cosmos, which is their software suite. So they offer a very comprehensive hardware and software solution for AI workloads. Very interesting and very on theme. They are also just starting to really explore how they can get into more optical solutions. Now, the chart, if we take a look at the chart, you can see we had a long IPO droop. Eventually, we got some real strong action. We had a breakout. And look at the elephants. The big funds are all over this stock. 1, 2, 3, 4, 5. There's like 6 big blue spikes as we came up the right side. The stock has really, really been strong throughout December, even resisting any pullback that we had in the middle to late December. Now, another interesting characteristic of the company, I think, is the sequential sales growth. Every quarter, sales are going up somewhere around 5, 8 to 10%. Now, that's really interesting. And what is even more rare is the pace of the sequential sales. They actually, believe it or not, the sequential sales growth is accelerating. That's extremely rare to see a company growing 5% on the top line, 8% on the top line, 10% on the top line, 11% on the top line. That is just a real sign of demand. There's big estimates for this company. It's not a cheap company, but it's really best in class. Now, they have competition. Broadcom and Marvel is also in there with their own solutions. So there is competition, but I wanted to go back in history a little bit as we continue the conversation about Astera Labs. So I wanted to go back to the 90s. And the highway of the intranet really started to get going in 1995. But the acceleration of the internet really started to revolve around fiber optic cable to deal with transmission. And in 1998 to 2000, bandwidth demand was absolutely exploding. Text was getting combined with graphics, audio was getting combined with video files. Netscape had released the first internet browser in 96, and there was just tremendous demand around this highway of the internet, which is fiber optic cable. Now, JDS Uniphase, JDSU, which is now under a new symbol of VIAV, VIAVI, but JDS Uniphase was really, really a big player. And the way this came about was JDS Vitel was a 1996 IPO. They made passive fiber components. And Uniphase was a 1993 IPO, and they made what they call active fiber components, particularly lasers. And both companies sold to all the big fiber optic companies, Lucent Technologies, Nortel, Alcatel of France. So they merged in 1999 in January, right here as the stock broke out on a base from this base in the early 1999 on the news. And I'll never forget it. I think it was Joe Kernan was talking about this merger, and he really tipped it off. He said, this could be huge to bring together in one company passive and active components being part of the fiber optic build out. And you can see the stock acted really well. It went up for 9 weeks in a row, and it just started a tear. And what they did is the innovation was they had a technology solution to increase bandwidth, and it was called wavelength division multiplexing. So they had this way to divide light to create more bandwidth in the fiber optic cables. In 1999, at the end of the year, they acquired Optical Coating Labs, OCLI, which no longer is here. But this company got them to extend their runway into optical components. So this company just had a tremendous year. And there, believe it or not, there were 3 high type flags in this move, and the stock split 3 times on the way up. It was just a powerhouse. It all ended with the major market top in March of 2000 with the dot-com bust. When the dot-com companies bust, there was no need for to continue with the build out of fiber. There was an overcapacity of fiber, and gradually the story fell apart. So I share all that from history because I wanted to look at JDS Uniphase as a historical precedent, potentially, for Astera Labs. So here's that base. Now we're looking at a weekly chart. Here's the merger of JDS Uniphase. Here's the massive volume follow through that came through on the biggest volume in the history of the company, followed up by 9 weeks up in a row. Bill O'Neill used to tell us 5 weeks up in a row was a great sign of institutional accumulation. Consistent buying. Look at all the closing prices. You can draw a line right through them. Consistent buying. 9 weeks is impressive. That's how this move got started. So if we move to the right, this is Astera Labs. In this base, they had a product launch of the Scorpio product, which got a lot of action and attention back to the stock on good volume. Then we had this massive breakout, and you'll notice the parallels. It was a massive breakout of an IPO base, and it was on the biggest volume in the history of Astera Labs. And so far, the follow through has been absolutely excellent. It's up 6 weeks up in a row. And again, that's with the market kind of pulling in the last 2 weeks. This is still going on a tear. So there's some interesting parallels of the price action coming out of this major move. I think there could be something here that's really special, but I just wanted to bring it to your attention. We'll have to monitor it and see if it develops. All right, moving on to the next name. This is SoFi Technologies. This is a digital financial services ecosystem. Basically, this is a company providing financial services that is completely digital, and they target young, high-income individuals by providing a comprehensive solution. It started off as a student loan refinancing company, but now they've moved into banking, checking, and saving. They actually have an investment arm, SoFi Invest, which deals with, you can buy fractional shares, you can buy crypto, very low fees, all responsive to the millennials. They can do estate planning services. And one of their technology advances of building this from the ground up is they do B2B partnerships with other fintech companies and banks. And they can extend their services. They have lending partnerships, and so SoFi can get into originating loans and credit cards. And these are really at their infancy stage. They don't have many credit cards yet, but these are potential growth areas for the companies. Now, expenses are high. They're trying to scale up this business, so expenses are still high, though they may have turned the corner. You'll notice in 2023, they were negative on earnings. In 2024, they've turned the corner and they're positive on earnings and a good forecast for 2025. The competition, though, is really high. You got PayPal, Robinhood, Chime on the fintech side, and they have competition from the big banks like JP Morgan and Wells Fargo. You can see the data block, earnings and sales are solid here. And the price action is a long base, had a breakout, and had a really, really strong move up. You hit the green flag status by this little green flag in market surge. But what's also interesting is the surge of volume that came as we broke out of this base. And the base was a nice long base, fairly symmetrical. But what we are forming here really looks to be a high tight flag pattern. The stock ran up over 110%, and it's only pulled back 11%, which is essentially nothing. So this is a really interesting technical position on the chart. And I think this has potential here in 2025. It's one you might want to do some more research on. Another fintech company, here's Affirm Holdings. Again, this company is another digital mobile first type of commerce play. They primarily drive their business through the buy now, pay later approach. And they have about 30% market share in buy now, pay later. They also pride themselves on no hidden fees along the way. They have advanced AI technology being applied. When somebody wants to do something on a buy now, pay later, they can actually apply AI to determine how creditworthy is this individual and what rate they should get and what term of loan should they get. Now, high-end merchants like Affirm because high-end merchants typically don't like to discount their prices and have big sales. So by allowing people to buy now and pay later, the merchants can keep their pricings flat at fairly high prices, premium prices, and the flexibility is in the buyer can actually finance their purchase over a period of time. So high-end merchants like this model. They have competition. They compete with the big banks, the Visa cards out there, Apple Pay, Square has their own Afterpay, which is also a buy now, pay later approach. So Affirm has got competition, but the company seems to be really turning the corner. They have sequential sales growth, and their earnings losses are shrinking. They are now showing that they probably will still lose money in 2025, but get to profitability in 2026. A little caution sign is the mutual fund ownership has really been flat, not very robust. That's a little bit of a cautionary sign, but the earnings line is starting to move higher, and it had a very nice breakout, and it's consolidating well. So Affirm is another stock that I think could be a young gun success in 2025. Next pick is Dutch Brothers. This was the next two names are stocks that were kind of 2021 hangovers. They went through an IPO droop, but they're coming back now. So interesting part about Dutch Brothers, this is a company that has coffee and specialty drinks. Their business model right now is they are trying to rapidly expand the number of stores. They're trying to get 20 to 30 stores per quarter, aggressive growth. And the last couple of years, they've been plagued by high labor costs and higher food input costs that put a real lid on the stock. The past 2 years, the stock's done nothing. But now management's reporting that labor and food costs have come down. Mobile ordering is now enabled at 90% of their locations, and they have big plans to open up 160 locations in 2025. So this stock is a little bit of a turnaround from the 2021 IPO droop. What's really interesting, though, is you can see erratic trading for a couple of years, and the trading is not completely smoothed out, but it's certainly turning the corner and getting a little bit more tighter. Had a big breakout on earnings here on the biggest blue volume it's had since it's an IPO going back to 2021. And you can also see the renewed interest by mutual funds, gone from 216 up to 393. 400 is typically a level that I like to see that shows there's some real tipping point, that funds are really understanding the story and can support the stock. So we're almost at that 400 tipping point for Dutch Brothers. The consolidation looks tight after the strong breakout. This company has the earnings finally really moving up from the lower left to the upper right. So again, this stock I think has some potential to be a leader. All right, here's the next one. Again, Toast. This is a point of sale system for basically restaurants primarily. There were 110,000 locations throughout the US, and they help restaurant merchants with loyalty programs, marketing programs. They integrate their entire point of sale into food delivery apps such as DoorDash, Uber, etc. And they also have a part that of the company that does short-term lending to help restaurants from 1 month needing bridge funding up to 12 months. So it's another feature to try and keep their customer with new services. Toast has been successful with big chain restaurants and been strongly adopted. Now, Square has dominated with independent mom and pop restaurants, but the big chains have really been attracted to Toast. It's a subscription model, and the subscription model is really spinning off consistent 20% quarterly sales growth. You can see the sales growth here. The last 8 quarters or so has all been above 20%, 25%. And you can see that earnings are solidly in the black here. And there's some good estimates of 35% for next year. Nice volume cluster on the chart here. We had 3 or 4 weeks in a row on the breakout. Again, IPO droop finally has kind of had multiple bases that failed and failed and failed. This one seems to have a strong breakout with some follow through. And now that breakout is is consolidating in a healthy way. We're still above the 10-week moving average line. So Toast is something you might want to put on your radar. Now, here's a name you may not have heard of yet. This is Amir Sports. This is a sports leisure branded company, and it's actually a collection of 10 different sporting good brands. You may be familiar with Solomon's. They make a lot of skis and shoes. Wilson, you probably are familiar with in the United States, make ball and rackets for tennis and ping pong and other sports, pickleball, etc. And Arc'teryx is an outdoor clothing sporting brand. Now, the interesting part of the story with this one is the founder of Lululemon, Chip Wilson, formed this company along with 4 other Chinese companies, one of them being Tencent. So this is a collaboration. And really the play here is this company has been formed to play into the growth of sports in China and Asia, where they generate 54% of their sales. There's rapid store openings happening with the focus really being on the middle class in China and Asia. Stock's an IPO, came out of a long cut base here. It broke out. You can see some nice blue volume spikes, and the stock is currently in an uptrend. Now, you can see that there's some good growth forecasts for earnings for next year at 47%. And you can see the data block here for sales. So this is an Asia play on sporting goods. And you'll notice the fund ownership, it's still fairly young. But it is going in the right direction. 72 funds to 92 funds to 180 funds in the September quarter. So there seems to be a lot of room for more funds to discover this company, kick the tires and hopefully invest. That would push the stock price up further. So Amir Sports is something to put on your list. It's a little bit of a young IPO, but it's a play really for China. And the last one I have in this young guns category is Viking Holdings. This is a different angle on the cruise ship sector. Viking Holdings, their bread and butter is river cruises, and they combine that with a cultural component. Most of these cruises, they all launch in Europe and some of the beautiful historic rivers and cities. So it's all a riverboat type cruises. Now, there's a couple of differentiators. There's no gambling on these cruises. There's no kids on these cruises. There's no kind of amusement park atmosphere. These are really cultural riverboat cruises, and they're attended mostly by the customers that are coming from North America, and they tend to be affluent people, where 90% of their bookings are from North American customers. Now, bookings are solid and looking really good. They've got 55% of 2025 capacity. It's already booked, and they're adding new ships. So they see an increase in their capacity of 12% in 2025. And I remember Bill O'Neill at many of the workshops would always say during every bull market, he said, there's always 1 to 2 names from the leisure sector that have a good performance. So Viking might be one of those companies. You can see there's a good forecast for earnings growth in 2025. Not a barn burner on the sales, but solid, steady sales and earnings. The young company broke out of a base here. It's its first base, and it's been in a trend. Now, this stock can be volatile. These bars here are fairly wide, and you can see this shakeout got support down at the 10-week line, which was encouraging to see. We've got blue volume spikes. We don't have any red distribution spikes yet, and it's a fairly tight consolidation. So maybe this stock can make another move higher of 25, 30, 40% in 2025. So Viking Holdings is another name, an idea for your watch list. Now we're going to get to, I guess, some of the fun part, the mad money. Now, these are highly speculative stocks. They don't have big earnings and sales, and many of them are turnarounds. But I always try to look for something I think might have potential. Okay, the first one I have here is Serve Robotics. This is an autonomous zero-emission sidewalk delivery robot. Now, the history here is Uber acquired Postmates in 2020. And 3 months after they acquired Postmates, they spun off Serve Robotics. Now, Uber still owns 16% of the company, and NVIDIA owns 11% of the company still. So the idea here are these small little robots that can deliver food and retail items in urban environments. They're kind of like the last mile delivery device, and they're totally built with AI technology. They've been testing these in Los Angeles and San Francisco as they try to scale up and work out the bugs in the system. Now, they have a partner, a financial partner, Magna International, who also helps with manufacturing these little robots. So highly speculative. You can see there's really, no revenue to speak of, and earnings are all still in the red. Now, it's competitive. There are other companies here I've listed that compete with this robotic delivery model. Highly volatile stock, and it's very, very, you got to be cautious if you're going to play this at all. There's no real fund ownership at all. So highly speculative. But if you have a little bit of mad money that you want to put to work in something that, if it hits and it actually becomes more of the preferred method, maybe this has some potential. I have some concerns about it in terms of an urban environment with these little robots, from theft and damage, et cetera, and abuse. But let's see how it plays out. It's an interesting idea, but it's pretty embryonic at this stage. But I wanted to put it on your radar for something that for those of you that like to speculate. Next one is TG Therapeutics, TGTX. Now, this is a biotech play. Those that know me, I don't venture into biotechs too often. I typically avoid ones that don't have earnings and sales. Now, you'll notice that this company is a biotech with actual earnings and actual sales. The primary drug they have is Briumvi, which is a drug for relapse from multiple sclerosis. Now, this Briumvi has been successful, but they're actually working in progress right now in phase 3 trials for an enhanced version to treat another relapse characteristic. If that gets approved, it could be 4 times the market size than for the original drug. So they're also working on Briumvi having ability for people to self-inject themselves as a delivery method, because currently you have to get an IV at a medical facility. So if this plays out, phase 3 trials, it could really open up the market, which could give the stock a boost. Now, there are over 300 funds in the stock already, which is really encouraging. We're approaching 3-year highs in price on the stock. You'll notice some big blue volume spikes, and there is a big earnings forecast for this company if all goes well. Now, if this particular phase 3 trial fails, this stock could collapse, it could gap down, it could be ugly. But again, this is speculative type of play, but it is a biotech name that I think has real product that if things go their way, it could be a winner. All right, next one is Rocket Companies. This is for Rocket Companies, which is really a housing and mortgage play. Now, what's interesting was in September-ish, when the Fed started cutting rates, everybody thought mortgage rates would come down aggressively, and Rocket Mortgage broke out of a base and really was working well. Then all of a sudden, after the election, interest rates have been rising, even though the Fed has begun cutting. So it's a really interesting dynamic here. We have to see how this plays out, because what is the bond market telling us with rates still rising when the Fed is cutting? Now, Rocket is highly dependent on interest rates and mortgages with their platform in terms of customers driving sales. But they have integrated digital services for all of their products. They use artificial intelligence integration into the Rocket Logic platform to automate things. So it's a very sophisticated company with very high aspirations if you go to their website. Now, I don't think this is going to do much in the first half of this year coming up. You can see the meltdown in the stock when long-term rates have been rising. Complete meltdown. We're almost, hitting almost 1-year lows, believe it or not. So I don't think this is going to gather much steam until maybe Q3 or Q4 because it's so sensitive. But this would be a turnaround play, because I think if in the last half of the year in 25, if rates do start to come down, this stock could probably easily double. It's already at $11 a share, so it's speculative money, it's mad money, but with rates coming down, maybe the stock can turn around and make a move. So again, it's speculation, but it's something I'm putting on your list. All right, the next one is a silver play, which you probably were not expecting. This is a turnaround play. Gold and silver markets have really been roughed up since the election. And what we've been seeing in some of these metals is, and you can see it here on this chart, a real washout with continuous selling. This First Majestic Silver has had selling volume, down volume for 8 weeks in a row, some of them with really, really high peaks. So it looks like it's almost climactic, exhaustive selling. And it really is leading me to the speculation that, when everybody's positioned on one side of the boat, we could rally in the other direction. If everybody who wants to sell silver is out of the market in silver, then it wouldn't take much buying pressure to get a rally in silver. Now, if you look closely, the turnaround in earnings and sales, maybe it's beginning, maybe a quarter or two here. Things look like maybe they're beginning a little bit of a turnaround. It's hard to tell. It's really, the metals can be erratic, but this is mad money category. This is a speculative turnaround play, and part of it is just looking at the charts, looking at this exhaustive climactic selling that maybe goes the other way for a rally in 2025. So I've put that there to cover a different market with something that's a little further out on the risk table. All right, so that's a lot of information. Those are 16 ideas for 2025. These are the prices they have as of December 27th. I've also put in each category honorable mentions, so the liquid Glamours, Google, and CrowdStrike. You can see the honorable mentions here: Influent, Asana, TCOM, etc., Credo. And the mad money category, I think Snow is a potential turnaround. And there's some other, a biotech company here, a database company here, and SoundHound is also an interesting speculative idea. Now, I want to emphasize again that these are not stock recommendations. And I also want to remind you, these are not part of my portfolio. This is a fictitious list of stocks that I do think have some good potential. And you should consult a professional investment advisor before making any investment decisions. Now, I will disclose, out of all the companies we talked about, there are 4 on the list that I currently own a position: GEV, IBIT, A-Lab, and Dutch Brothers. These are subject to change at any time. So that's a big part of the video. All those ideas, my 2025 outlook. If you enjoyed this video and you want some more, go to Rain King Insights. My website started in July. It's new, it's fresh. Go to rainkinginsights.com. It's a site that's really dedicated to education for growth stock traders of all levels. We have a raindrop series of videos for 0 to 2 years experience, people that are just beginning. Sprinkle series, 3 to 8 years experience, appropriate topics. And the Cloudburst series is 8 to 10 years of experience. And I put out a weekly focus list of specific actionable setups on stocks I see in the market. That comes out once a week if you're at the Cloudburst level. Also, my weekly general market updates come out every single Friday afternoon. Those of you that are not members, if you want a sample, just go to my YouTube channel. This is the handle, and you can go pick up any of the GMUs that were public. The ones that are public currently are the first one of every month is available to the public. And they're packed with education and teaching moments along the way, as I shared in the 2024 recap. I also have GMU extra videos. These are real short videos that are specifically 10 to 15 minutes about a specific trading topic that most people really do enjoy. So that's a big mouthful of stuff for 2025. I appreciate you all hanging in there, getting through the whole video. It's December 29th, 2024. I hope you enjoy New Year's Eve and New Year's Day, and I will see you again as we start the new year on January 3rd at the GMU.